So how do you feel about an earnings trade in Coinbase? You know, that underlying that's involved with cryptocurrencies? Well, that's what we're going to explore today in today's final cherry bomb trade of the week for May 7th, 2021. Here we go. So you can see up here, we're looking at Coinbase. It has not so stellar liquidity of 2 drops out of 4. So we're going to be in the monthlies and looking for where there is liquidity. Has an IV rank of 63 right now, which makes those short premium trades exciting for us, hopefully, in a good way. But, we'll probably see that for most of us, well, I don't know, I shouldn't speak for other people, but I would say for me, the position size on this one, the risk is a little much. So I'm going to explore some alternatives beyond just the cherry bomb email that we received in our inbox today. So hopefully that'll give you some other ideas to consider. But let's hop on in and get started, shall we? Hi, my name is Neil, and this is Option Theory. I'm down in the bottom left corner, and on screen here, you can see Coinbase's chart. So it's not been in existence long, and you would probably not be inspired to be bullish when you see candles looking like these guys. So like the email said, 1, 2, 3, 4 green candles on the screen, and the rest are all red. So are you dying to jump in front of that train or bus, whatever your favorite mode of transportation is that might clobber you? Well, we're going to be looking at doing just that. So let's take a look at those trades. Well, let's take a look at the trade as it was sent to us. And if you'd like to get these emails sent to you, I'll tell you how to get those at the end of the video. So let's get cracking. On the Analyze tab here, in the Add Simulated Trade, I've typed in coin here. And we're going to be in the June monthlies, June 18th, right, with 42 days to expiration as of today, May 7th. So if you're catching this video in the future, not going to be 42 days. And I have videos where people are watching them months after they've actually closed. So thanks. I appreciate all views. Thank you. All right. So where we're looking at, according to the cherry bomb email, is that we would be selling the 170 put, naked put. Yeah. So that means we'd be taking on, nearly $17,000 of risk should coin continue to drop. That gives me a little bit of heart palpitations, especially looking at those candles. But let's take a look. Let's analyze this trade. I'm going to left click on the bid for the 170 to see that they want me to get 120, but that's not a mid price. Shame on you. Let's go with 20 cents is 10 cents, right? So let's go with 10 cents more than that. Let's go with 130. That sounds good. Let's try to make 130 on this one. And go ahead and now take a look at the risk profile and see what our probabilities are. I'm guessing the probabilities will be stellar, but that doesn't help me sleep too much. Oh, that's not working because I'm not setting the date right. Duh. What do I always do when I get here? Let's get the date in the top right corner to match the date in turquoise in the bottom left corner. June 19th. There's my expected move. Let's drag the right side to get the expected move. There we go. All right, now let's go ahead and set our price slices to break even at expiration. Hello. It's not working. It's not working. All right, so let's get rid of some price slices here. Delete slice, delete slice. Let's drag, we're gonna do it manually. As close as I can. That's good enough. So we're looking at nearly a 94, 95-ish% probability of profit on a trade like this. We could make $130 in the next 42 days. Of course, we'd be looking to manage this if we get to roughly 65-ish, 65 dollars in profit and take our money and run, right? The tough part is when you see the amount that you're putting at risk, the amount of capital that you have to have on the line to do this. So we go to confirm and send and we see 870. That's because we're taking the 130 away from our strike price of 170,000, right? So if that is a little bit much for you, I totally get it. It's too much for me. So I'm going to go ahead and edit this trade. well, no, not in the trade. I'm not going to do that trade. I'm going to go back to simulated over here. And what I'd like to do is explore an alternative. So here's the first alternative that we're going to come up with. If you're willing to take the risk, but not take as much risk, needing 16,000 over almost 17, let's call it $17,000 of risk. Let's take a look at where we have the open interest, and it's not giving us a ton of it, but here we go. So 3,000 open interest here on this one, a 12 delta. The 16 delta doesn't have a lot of open interest. So let's say instead of selling the 170, we sell the 200, right? But then what we can do is see there's more liquidity down here as well, is what if we buy the 170 to protect ourselves so that it should go lower than that one, we will stop our losses, right? I'm going to hold down the control key and click on that ask for the 170. So, right, instead of being able to make $130, I could make $250. Yay, that's a positive, right? Of course, it comes with the trade-off, right? So what we'll do now is take a look at the risk profile and adjust. Let's see if it works now. Break even. Woo, it did. All right, cool. So we're not looking at a 95% probability of profit. We're looking at an 83% probability of profit, which is still awesome, right? We could make 250. We'd look to manage it if we get to 125. But I think the good, make you sleep better feeling that you could have here is we're going to right click this trade, choose confirm and send, is that instead of risking nearly 17,000, no, 16,870 or something like that, right? We're only risking, let's call it 3,000. That's better. That might be something tolerable for your account size. And especially if you're with me here in simulated land, right? That's definitely doable in a portfolio of this size, for sure. Okay, so I do kind of like that trade. That might be the one I'm going to go with, but let's offer another alternative. I got two more alternatives I want to consider. So let's clear out this trade. Let's go back to the add simulated trade and come back down here. So oftentimes, we see some good open interest here. So what we could look at is selling the 230 and buying the 220 for a $10 wide, right? Looking to collect 275. That's not 1/3 the width, but it's close, right? So now if we go over here, risk profile, we're not going to have 83% probability on that one, sorry. We'll have 65, still not too shabby probability on this one. We could make 275. We would look to close that, 180-ish, right? That sounds good to me. And then the other thing that might make you feel better. I'm not editing this. All right, I'm going to go ahead and right-click that and choose confirm and send. And instead of risking the $3,000, here's a trade where you can risk only $725. Now, you see, I think this is one of those things that if you're new to this kind of thing, if you're new to trading, seeing how that you can dial in the amount of risk you're willing to take, it's just... you can't see my hand. It blew up. I thought that was so cool. I still do. You can tell I still think this is cool. All right. So I wonder which of these trades. Let's go to the final one, which is not a short put trade. I wonder what you think about this one. Something that, I've recently done a few trades like this in recent videos. And, it's an option. I shouldn't have said that. Sorry. It's something to consider. All right, let's go ahead and take a look at this one here. If we go ahead and there's not a lot of open interest here, but if we go at the money and we buy the call for the 56 delta, and then we go across here and we sell the put, right? And then I go and find a put that's near the 5 delta that has better open interest. There's that 170. I'm going to control click and buy this. So I now got this custom jobber here. So now we've got this simulated synthetic position, synthetic stock position, right? Where you're going to be still bullish. Let's take a look at that risk profile. It's going to be linear. It's going to look a lot like a long call, right? A unlimited profit potential, right? And decent probabilities. Let's see. Yep. Oh, okay. Not apparently not so great. What did I mess up on this one? Well, did I not do the right strikes? 255, 255, yeah. So this one does not look like an option. Boy, I thought it played out a little differently when I looked at this earlier. Yeah, I don't like this one. So thumbs down on that synthetic position one. But you would risk a lot less. Let's take a look at that one. This was the point here. 8,000 rather than having, you'd be simulating being long nearly 100 shares, 95 shares. But instead of needing $17,000 to do it, you'd only need 8,800. So that's pretty cool. All right, I'm going to close out that trade. And the one I'm going to go with, I think, is the one that was our first alternative, where we sell the 200, buy the 170, go ahead and right-click this trade, choose confirm and send. There's that risk profile that we were looking at. I should say the risk and profit. All right, I'm going to go ahead and hit send. That's going to put that in my working orders. And I thank you. Big thumbs up for making it this far into my video. And I'd like to give you the, how do you join us? How do you get those emails that we get 5 days a week? 4 of them contain trade ideas. So, simple things. Go down to the description. I've put a convenient bit.ly link down there for you. It's only a bit.ly link because it lets me know that it gets clicked. That's all. That's all I want to know, right? It's not something, there's no affiliate relationship that I have with Tasty Trade. Get over there, you can see all of their emails that you could sign up for. They're all great. But the one that gives you 4 trade ideas a week, which we put videos on, we give you alternatives like this, that's the Cherry Bomb one. Go ahead and sign up for that, and then come on back to this video, or any one of my videos. Come back to this channel. I'd love it if you subscribe to this channel and hit that bell. Why? Because this could be an interactive experience for you. Maybe you're new to trading. Maybe you're just looking for an opportunity to practice putting on trades and trade ideas. So that's what we're here for. That's what we're going to continue to do. So thank you so much. If you think I've earned that like, would you hit that like button? If you do any of these trades, would you leave me a comment with what your fill price is, what your strategy was, like which trade you went with, strikes maybe? Just give me a comment. I will absolutely give you a like for that. If you didn't like this video, you're certainly welcome. It's a free world for the most part. Hit that thumbs down, but then tell me why, please. All right. Thank you so much. Until I see you in tomorrow's first video of the week, Monday, hopefully we will get a trade idea. Give me a suggestion. What do you want to see traded? All right. Until then, may the market be with you.